The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the November 14th, terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with some empowering beliefs. You know, you and we have no idea of the giant capacity we can immediately command when we focus all of our resources on mastering a single area of our lives. And one of those areas, well, I believe that should be mastering trading. Another area is time. You see, once we master time, we understand that typically, we overestimate what we can accomplish in a single year. However, we underestimate what it is that we can accomplish and achieve in a decade. Now, some of us don't achieve what we truly want, and the main cause is that we never really direct our focus. We never concentrate our power. It's as if we dabble our way through life, never deciding to master anything in particular. Success, folks, it comes from taking the initiative. It comes from being persistent and making sure that we express the depth of our conviction with every single action we take. So the real question is, what simple action could you take today to produce a new momentum towards success in your life? Tiger dollars sound like an action that you could take. This much I know to be true, folks. The path to success is to take massive, determined action. There's no abiding success without commitment. If you want to be successful, it's pretty simple. Find someone who's achieved the results you want and copy what they do, and you will achieve those same results, folks. It really is as simple as that. Just think about your favorite recipe. Maybe it's some chocolate chip cookies, some brownies, whatever it might be out there. Maybe your favorite meal at a restaurant. You could actually replicate that. All you have to do is just copy that. That's the same thing that goes on. There's the time, folks. The time, there's no question. The time is now to master anything it is that you want in life and in love. Why? Because mastery, folks, it is a beautiful thing. Look, all you've got to do, life is nothing more than a mirror, and life will reflect back to us that which we think. My favorite expression about mirrors is this: turn your mirrors into windows. It means look in the mirror, see the person you want to become. I say become because we are always improving, and then take massive action and jump right through that mirror. Turn that mirror into a window, folks. Speaking of mirrors, let's go check out the mirrors in these markets out here right now. Dow is off 20 points, trading out at 15,801. S&P is down about 1.5 points, trading out at 1780. Composite down 16. That's off 0.4%. Russell 2000, leader in the clubhouse, on the way down, off $6 and change. Apple's up $4. Microsoft down 38 ticks. Google is up $1.17. Lead the charge. The upside is Priceline PCLN. It is up $14 and change, trading out at 1138.62. Amazing. Amazon up $6, trading at $3.62. Netflix up $6. Apple up $4. Man, thank goodness that all those stocks are up. And the composite here being down 14 points. That could be some bloodbath out there. X1, XONE is up 5-6% this morning, up 340. Shire PLC, SHPG is its ticker symbol. That's up $3. Pharmacyclics up $3. Solar City up nearly 3. GoGo Inc. up 265. Voxel Jet up 288. Sohu Communications up 240. To the downside, EPZM, Epizyme Inc. I'm going to go with down 29%. Truly getting hammered here this morning. Let me see if there's some news behind this out here. Looks like some type of inhibitor demonstration encouraging initial findings in ongoing phase 1 test out there. In any event, somebody's not liking it. Many shareholders perhaps will go take a look at the volume coming out of that. KISS KSS, Kohl's Corp, that's down about 9% this morning. Multimedia Games, MGAM, that's off 15%. Kihu, QIHU off 4%. AFC Enterprises down 7.5%. NetEase off about 5%. Cavium, CAVM is the ticker symbol, off 8%. Cisco down 12%. Intercontinental Exchange off 1%. Lululemon down 4%. Align Technologies off 5% as well. Our call number is 877-927-6648. I see Fed Chair nominee Janet Yellen is up on the stump. We're going to see if today is a sell 'em when they're yelling type of a day out there, or if this is going to be a buy 'em when they're crying out there, as it was yesterday. Right now, the Dow's off 14 points. Let's start off by taking a look at the New York Stock Exchange out here. A nice attempt yesterday with regard to the market for the bulls to actually take control. Believe it or not, they did not take control. We had some divergence between the oscillators out here. The price oscillator still on its is still negative. That says summation index is ticking down. The volume oscillator did manage to get itself above the zero line, so a little bit of a tug of war out here. What the New York Stock Exchange did yesterday with that wide-ranging bar, it closed right at the 0.786 retracement out there. Markets don't end on bars like that, so we'll see what today is all about. Now, it could travel sideways here for a couple of days and then perhaps begin its next move to the downside. You got that 3 drive to a top pattern. So New York Stock Exchange is the one index that is got the signals out here that says, it's not exactly paradise, not just yet. You get the New York Stock Exchange to close above 10,127.63, and it should be off to the races. That's that 3 drive to a top pattern. It's a key reversal session, the bearish engulfing. It's got it all up there with regard to resistance, and if the bulls can overcome those bears, they will be trampled, and probably we get a nice move into the end of the year out there. That is on the New York Stock Exchange. Let's take a look at the S&P 500 right now. Very flat trading session out here, down 30 cents, trading out at 1781. It is the S&P 500. We took a look at the ES Mini, the daily contracts out there, getting up over resistance. It suggests that it actually wants higher price. That first projection was 1776. That area held beautifully, got to 1776, had a key reversal session on October 30th, set up some nice resistance, nice other bearish engulfing candle on November 7th. Price getting above both of those areas yesterday with conviction, a wide-ranging bar out there, and today just kind of a little bit of a rest. It does say that the S&P 500 next wants to travel into about the 1811, 1816 area. Of course, 1850 is not even out of the question. 1850 is the next primary trading range boundary line. That is inside of the S&P 500 out here. Let's go take a look at the Dow, see what it is doing. So it's really going to be the S&P 500 we really want to be paying close attention to for any kind of signals out here. We take a look at the Dow, and we go from one key reversal session to the other. The first key reversal session inside the Dow being May 22nd. If we go from the top of that, which is 15,542, all the way to that key reversal session on November 7th out at 15,797. You can see the Dow is trading right into that area here as we speak. It's trading at 15,824. Another break above that with conviction, and it sets up the 1,000-point move to the upside. 1,000-point move. Look, this thing has been consolidating for since April of 2013. So it's been consolidating for a good long time. Just think of that rubber band having truly been wrapped and stretched and so forth. So a 1,000-point move on this breakout above this little diagonal resistance line out here says that the Dow would make it from the 15,600 area to about 16,006. Right now it's trading out at 15,825. So the Dow needs to get a little bit above resistance. Struggling in the markets here, Russell 2000. Russell 2000 trading down just a bit here today. It's off about $5, trading out at 1107. You can see the weakness of the Russell 2000 compared. Russell 2000 looks more like the New York Stock Exchange out there, so it is worthwhile to be paying attention to. This thing here, big reversal session on the trading session of October 30th as well. So in order to prove itself to you, to me, and to the world, it's going to need to close above 1123.26. That's the high of the trading session from October 30th. Nice wide-ranging bar here yesterday coming into the 0.786 retracement level. You know, this has held the support level of the rising trend line coming off of November 16th out there. Russell 2000 and the New York Stock Exchange being weak, something that we will be paying attention to there. Now, inside of the speaking of the New York Stock Exchange, let me pull up my little screen out here off to the side. 1,000. In order for the bulls to actually take control of the market in the NYSE today, it's going to need 1,008 or more net advancing issues. Right now, we've got 130 net advancing issues inside of the NYSE out there. So that is also taking a look at the Russell 2000. We go take a look at the NASDAQ Composite here. NASDAQ Composite trying to get above resistance. That resistance line being October 30th out here, 39.66.71. Yesterday it closed out at 39.65.58 out here. So far, that's the area where it needs to catapult above. If, in fact, it can do that, where is the next move? Well, look, 4,048 will become the 1 to 1.618. A to B equals CD up. 4,048. But if we come and we take a look at the long-term monthly chart, the low swing point is 43.55. That low swing point is March of 2000. And that is where the NASDAQ Composite could very easily head to out there. So that's on the composite. Let's take a look here at the NDX 100. Let's not skip over that. The NDX 100 trying to get above its resistance area of October 30th, 34.0828. Yesterday closing out at 34.0556. So all the markets are lined up, some trying to really get over resistance. It's the S&P 500 that has really had the conviction now behind the move, at least when we take a look at the futures contracts out there. We take a look at the ETF structure. Let's go do that. In fact, let's start off by taking a look at the SPY, not the diamonds out here. Let's take a look at the SPY. The SPY here yesterday up and over resistance, that bearish engulfing candle from November 7th, also a key reversal session, and October 30th. November 7th had 157 million shares to the downside. Yesterday, however, above it with 103. Does not matter. It's over the 178.30 area, the 1 to 1.272. A to B equals CD would take you to about 182 and change out there, maybe about 182.40 or so. And it looks like that is where the SPY wants to head to. If we go back and we take a look at the Lucy in the sky with diamonds out here right now, the Dow Diamonds, they're trading out at 158.27. If we use those same key reversal sessions, you can see just a slight close above that yesterday. Volume inside the diamonds, 5 million shares, taking out the resistance that had 10 million shares. Not exactly conviction. Nonetheless, a breakout above prior resistance. Prior resistance becomes what, folks? It becomes new support. We'll see if that support is going to hold. Right now, the Dow's up 10, S&P is up 2. We'll be right back.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Flat market out here with the exception of Goldilocks and silver right now. Gold is up $23. It's up 1 8/10%. Silver is up 1 7/10%. So really neck and neck here. Percentage-wise, you've got silver up 35 cents. So let's go check in on the metals out here. You can see that what gold is trying to do today is get above the swing point from October 15th, the high of which is 1287.70. Now, if it can accomplish that feat, then the next feat is going to be, can it get above this descending price channel out here? So I would have to say that the best thing for us to be doing and paying attention to is a Goldilocks out here. You can see the .382 retracement is at 1298, the .618 at about 1322, the .786 at 1339. If you're listening to your radio or your mobile device at TFNN.mobi, those are the numbers you want to be paying attention to. But really, it is this long-term descending price channel, the top of which here has contained price. Any break above that will truly begin the markings here of a change in trend, a longer-term change of trend out here. One can argue that there's already been a change in trend because what we have seen here since the low that was put in, this is on the trading session of June 28th up to the high that was put in on August 29th, has been merely just about a .618, close to .786 retracement out there. And so that is absolutely true. You can see a little bit of a 3 drive to a bottom or butterfly pattern here that formed down at the lows here on October 15th. That makes those lows very important at the 1287 area, just as the high, because price has been traveling with inside that swing point. And if price can't get above the swing point, stay above the swing point, it brings the bottom into play. That's the 1251 area. Nice little bullish engulfing candle yesterday. Some additional follow through today. 99,000 contracts so far trading hands. That's going into 188,000 contracts downdraft here from November the 8th. But really what's going to be key is busting through this little descending price top. You can see here, if you just simply take a look at the trend line, the red line here from the bottom of my screen, that's coming off of the low from June 30th, next touch point being the low here on October 15th. We can see a nice little wedge that is being formed here. So we could see gold just simply move up and down with inside that wedge, and then once it breaks, then we'll understand the direction of Goldilocks out here. Now, that's on the daily chart. In the first hour, we took a look at the 120-minute chart out here. You can see on a 10-minute chart some nice little buying here. Maybe that's courtesy of Janet Yellen out there. Let's not pay attention so much to the news as let's pay attention to what the stock chart here is doing. So the dead cat bounce, we can see that is at the area of 1299. We also know that what Goldilocks is doing, it's working off an oversold condition. It got into the extreme oversold level. Did that at 5 o'clock, 5:15 last night, as was making its 1 to 1.272 or close to 1 to 1.272 A to B equals CD down. This is a 120-minute chart that we are looking at on my screen out here. Whether it can, the downdraft here on the 120-minute chart had 86,000 contracts. It's trading inside that swing point. Got in there with only 36,000 contracts at 10 o'clock. So far here, and this is a 2-hour session. 120-minute chart, 16,000 contracts. So it's coming into some fairly stiff resistance, this down bar here at 10 o'clock in the morning. How about that? I probably sounded like I should be up in the Boston area out there. And so coming down from 10 o'clock in the morning. So it's got some pretty stiff resistance out here. We'll see if Goldilocks can get above and stay above the dead cat bounce, the 0.382 retracement level of 12.99. So that's what's going on inside of Goldilocks' world. Let's go check out one of the other three bears, because certainly gold and silver have been in a bearish descending market. Here's the bearish descending price channel that silver has been in. Silver weaker than gold today. Could be it's a bullish engulfing candle, but it has got to clear, and it's tested the swing point low of October 15th, but it tested it with too much volume. So the first hurdle for silver is going to be a close above 21.52 out there. It's trading at 20.78. At 21.52, it'll also be trying to get above that descending price channel. We can see that silver got above that level, did it for 6 trading sessions. So for nearly a week before it got back inside of the descending price channel out there. So that's what we want to watch on silver. So even though silver's up 1 3/10% out there, you can see by taking a look at the chart, not exactly a ton of conviction behind the move. But let's take a look at an intraday chart out here. Let me come take a look at a intraday chart. We'll do that when we come back. Let's see, it was the 120-minute chart we were looking at on gold. Let's look at a 30-minute chart on silver when we come right back. Right now, the Dow is down 7. S&P is off 4 cents. We can go barefoot water skiing. Oh, how fun that would be. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. It's that time of year again, and our semi-annual Tiger Dollar sale is back. For a limited time only, you can get a 25% bonus on any Tiger Dollar purchase, and included in your purchase, you'll gain access to an exclusive 4-hour live trading event with Tom O'Brien on November 19th called Strategies for Trading ETFs, a live trading event. The only way to gain access to this exclusive 4-hour workshop with Tom O'Brien, which includes live trading, is by purchasing Tiger Dollars as part of this promotion. Tiger Dollars can be used for any TFNN products and never expire, so now is a perfect time to get your 25% bonus. Don't delay, this will be our last Tiger Dollar promotion in 2013, so act today. For all the details and to get your 25% bonus on your Tiger Dollar purchase today while gaining access to Tom O'Brien's exclusive 4-hour online workshop and live trading session specifically on ETFs, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Before we went to break, we were talking about Hi-Ho Silver. It's trading out at $20.74. And what I've got is the intraday chart of silver. I've got a 30-minute chart out here that we're going to take a look at. Now, what I also have on the chart here, I've got 4 moving averages. I've got the 200-day. That's the green one that we're going to focus on here for the moment. So the 200 period, I should say, versus 200-day exponential moving average. It's also the blue one. Blue line is the 50-day, and then there's the 8 and the 21. Now, you can see here the area to really be focused on when it comes to silver is going to be that 200-period exponential moving average. We can see that it's really been below that level. Well, clearly been below that since about 9 o'clock in the morning on November the 7th, so for a full week. So that could act as a significant magnet and area of resistance. Price-wise on that level is $21 and about 2 pennies as we speak right now. So that's another dollar above. Well, not a dollar. It's another, I can do the math here, 25 cents, 26 cents. Trading at $20.76 right now. So that's going to be an area to be watching on silver. It's up 32 cents. But what is, on the 30-minute chart, is this going to act as a significant resistance line? Of course, what you'd like to see is if you're bullish, what you'd like to see is price get above that area, come back, test it, and then hold. That's on the 200-day for silver out here. Now, what silver has not done on a 30-minute chart is complete any patterns. Any A to B equals CD patterns is really what I should say. Now, there is an A point, which would be the low at 1:30 yesterday afternoon. That's out at $20.41. Your B point of a potential A to B equals CD up. That would come at 1 o'clock this morning, out at 20.88. And then a pullback or retracement into the 9:30 session 1-to-1 would give you a price projection of 21.01. That would be your 1-to-1. A to B equals CD up. We take a look at it, the retracement, probably more closer to a 50% than the 0.618 retracement as price came back into that 9:30 session. So that is a potential A to B equals CD. Now, the B point on the 30-minute chart, no real volume there, 825 contracts. Of course, that was taking place at 1 o'clock this morning, so that would not be a hurdle for silver to overcome. So that's on the 30-minute chart. That's what you're going to want to watch on silver. Now, if I go back and take a look at gold with you just for a moment. Here's the A to B equals CD up on gold. So you can see here gold much stronger than silver. And it also has the 200-period exponential moving average. And so far right now, price is closed above that level. It has been tested now during this candle session as we speak. So you see the 1 to 1.272 is actually the A to B equals CD pattern that gold has completed. The 1-to-1 meaning your swing point, and this is, again, we're looking at a 30-minute chart here, so I switched over from the 120 to the 30-minute chart for you. The low coming in at 3 o'clock. Yesterday, 2 days ago, my apologies, 2 days ago, 1260.50 is the price there. That's your A point. Your B point is the swing high at 9:30. This is yesterday morning, 1279.80, no bearish engulfing candle, key reversal session out there. Pulls back the type of retracement that it did. Let's take a look at our B to C retracement out here. See if it was a 0.618. Boy, right to the penny, almost to the penny. The exact number to the penny is 1267.90. What gold actually pulled back down to was 1267.40. You got to love how that works, folks. And then it began its move higher. Now, a nice move here, a nice little spike at 5 o'clock yesterday. Volume there was 5,000 shares, 5,000 contracts, taking out 6,800 contracts. So a nice so far. What it has completed is the 1 to 1.272 A to B equals CD. It is traveling just slightly above the 200-period exponential moving average. We'll see if this area acts as a resistance or a support line. So what does that mean? If you were a trader, day trader, you were trying to fire off a trade here, if you've got gold and it is moving above the 200 period, it's made now. It's if you take a look at the intraday chart here, it's getting close to the overbought territory. So it's got to work that condition off. But with gold moving like this and gold being stronger than silver, the question is, which one is the buy? Is the buy gold? Do you think gold will go ahead and pull up silver? Will silver pull down gold? Which one would be the buyout here? They both could be the buy. There's your answer to your question. But you know what? Silver might be the one that might have the largest reward in there because the two ought to work in a tandem or somewhat of a tandem out here. So you can see gold stronger than silver. I would say, let gold lead the charge and then take a look at hi-ho silver out there. But you can see gold here. Let it do its thing. And its thing is, how does it deal with its next retracement? That's really what the key inside of gold will be. Again, it's a 30-minute chart that we're watching here at TFNN. What we'll do here is tomorrow we'll have to come back and take a look at it because there's only 21 more minutes left in the session out here. But let's see, it's Thursday. It's a commodity hour. That means Larry Pesavento will be up. So I'm sure Larry will be taking a look at Goldilocks and silver as well. And so we'll see then. In any event, let's go take a look at the rest of these commodities here. Light sweet crude traveling out at 93.11, trying to break through this 2.618 expansion area. I suspect it's not going to have too much difficulty doing that. It's just really been moving sideways to work off that oversold condition out here. It wants to travel down to 91.31 and then $85 and change out there. Bonds here are right now not doing a whole lot. That's the weekly chart. Let me come take a look at the daily chart out here of bonds. There we go. Well, bonds are doing a little bit more. They're trying to the key here for bonds is going to be this downdraft session right here, so November 8th. So I don't know what Yellen is saying. Maybe she's saying, hey, look, we're just simply going to keep buying bonds forever. Of course, if you are of the belief that bonds or that interest rates were going to rise sometime soon, and let's just say you happen to be a sovereign wealth fund out there. Maybe you're located somewhere in Asia. Could be Japan. They have a few bonds. Could be China out there. What would you be doing with your bonds if you were the money manager and you knew that you had somebody on the other side saying, yeah, I'm going to be buying bonds? What would you be doing out there, folks? In any event, right now, bonds have got some significant resistance up here at this downdraft session from November the 8th out here. They're traveling out at 132.18. Long term, they're in that descending price channel. Let's go take a look at natural gas. This one's for Lou in Nashville. Lou was calling earlier. He asked us to take a look at the January contract here for natural gas. It's trading at $3.57 right now. It is testing the swing point here from November the 5th. That had 56,000 contracts. So far this morning, it's traded 27,000 contracts. So a nice test and so far rejection of that swing point, the high of which is $3.57 out here. However, a nice pattern inside of all of the contracts here for natural gas. Nice little 1.272 butterfly. In this case here, right in the 340-ish range out there. So no bullish candle so far, just a test of a swing point on lighter volume. But 340-ish looks like the level to be watching inside of natural gas. Let's take a look at some stocks here that are moving and grooving in the marketplace to the downside here. Let's go take a look at this one. EPZM is the ticker symbol. Down 40% here this morning. Let's go see what it is trading into. If it's got a high volume low or something. EPZM, oh man, that does not look good. Oh, how about this? This is a IPO. This is an IPO, so there's absolutely virtually can't be more than just a few traders that are in a profit position inside this equity. So this had an IPO debut day of May 31st, folks. The low of that session was 1860. It's trading at 1923 right now. Pretty narrow band range of folks that might be in the money. Unfortunately, there are some folks that are stranded all the way up here at the high on July 17th in the 4570 to 4185 area. Man, that is a quick hit. It's why you use stops out there. If we take a look at A to B equals CD down patterns here inside of this, the A to B equals CD down. You can see it's on its way down to complete the 1 to 1.272, but I suspect much lower than that, quite frankly. So this stock could easily trade back to about $11 out there. A very nasty day inside of Epizyme Inc. out here. Price Smart, that's down about 6%, but how about this? Tile Shop Holdings out here. TTS is the ticker symbol. That is just getting the kibosh. It's breaking some tiles out here. TTS is the ticker symbol. It's down 23% and with volume as well. Let's go see, were they reporting some numbers out here? Let me see if I can pull something up on TTS. Tile Shop reports net income for Q3, provides guidance, but I don't see what those numbers are. Well, actually, we sort of know what the numbers are just by taking a look at the stock chart. They are not good. So Tile Shop here, how about take a look at this equity? I don't know if this was a reverse merger or something into this thing. What does Tile Shop do? I'm going to assume that they sell tile, right? Let's see if that's a stretch. Tile Shop Holdings operates as a specialty retailer of manufacturing and natural stone tiles. Okay, well, that sort of made a lot of sense out here. Well, this equity is already pulled back to a sign of strength off of the lows out here back in December of 2012. It only had 2.5 million shares. You've blown through that today, volume-wise, 3.9 million shares. Where's this thing probably headed to? Probably about 91 cents or so. The Tile Shop. That would be all the way back down to the breakout area. But this thing has got some major volume coming out of it today, and you've got to pray and hope that the fund, if there was a fund that was buying this thing on December 13th of 2012, you've got to hope that those folks are around and that they're going to go ahead and support it. And that low is 15.18. We can see that low was tested so far intra-session. But again, as we said, a lot more sellers out there because volume to the downside is outpaced that breakout session from December 13th. That is on the Tile Shop out here. Let's take a look at Kohl's. KSS is the ticker symbol. Let's see what it is doing volume-wise. It's down about 8.5% here, gapping down with some volume. Let's see if we can find where Kohl's is headed to. So Kohl's here has some pretty nice support. Let's get rid of the moving averages for you. We'll clean this chart up just a tad for you. Give me a moment to do that. So we can see that Kohl's had broken out on some nice volume. We're going to use that benchmark with regard to today's volume as well. Let's put a black line across the bottom of my screen out here. Well, it's coming back with more volume than the breakout session. Not a good thing. Nonetheless, it's not down to that area. And the area that I'm speaking of is the breakout that it had on May 16th. So that's your sign of strength. That's your breakout. That's your gap up. 11.6 million shares out there. Kohl's had pulled back on the trading session of June 24th with only 1.9 million shares. That's a nice setup because that 1.9 million shares was actually, the benchmark was the breakout. But ideally, when you can come back into the session that you broke out from, that means the day prior, in this case here, May the 15th, that had 3.2 million shares. And it came back and it tested that level with only 1.9 million shares. That's a pretty nice trade setup. Then you get another test of that area with only 1.6 million shares, a couple months later, August 27th, and that level held. So that was pretty nice. This thing had consolidated. It looks like Kohl's, what Kohl's did once it broke the consolidation. Let's go measure it. Once it broke that consolidation, which is measured to about this territory, and you can see it broke the consolidation here on the trading session of October 23rd. 3.2 million shares was taking out 9 million shares. Well, didn't take it out with volume, but it did break the consolidation. And let's go see if the volume, if the price move was equal to or greater than the consolidation. Look at that thing there, folks. Look at that. Now, is that beauty or what? The actual, I haven't looked at Kohl's, so prior to this. So the measured consolidation takes it right up to exactly where it moved up to on November 4th, as well as yesterday's doji. Remember, doji candle at resistance is significant. In my book, it's significant here. That says you've now got some significant resistance inside Kohl's at November 13th's high out there. Of course, that was already measuring and testing a price projection area, which was just simply measured by that measured move of the consolidation pattern that was out there. So expect Kohl's here. This thing is pulled back. It's pulled back into the consolidation zone, the original consolidation that it broke out. When you pull back into a consolidation, what does that set up for you? Exactly. It sets up a test of the lows again. So the lows of Kohl's out here. Now, the problem with today's move is you've got 7.7 million shares. That is also called what? Volume off of the highs, and it's big volume off the highs because the breakout session here only had 11.6 million shares. So this next test down here at the that original breakout session, even if it comes back on light volume, it's got some damage repair to do before it can get back up into test those highs from yesterday, November the 13th out. Let's pull this back a bit further, see what else we've got out here inside of Kohl's as was making a run for these highs. Let's put this on a weekly chart, see what else we've got inside of Kohl's. Looks like a big old consolidation that this thing has been traveling in ever since about the 2009 time frame. So Kohl's really hasn't done a whole heck of a lot. If we take a look at what that consolidation looks like, here's the consolidation really of Kohl's. I guess you put it right about here. So in this case here, Kohl's could easily make its way back to $41 out there. Take it all the way back into the 2009 time frame. Right now, the Dow's up 30, S&P is up 5. We'll be right back.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's up 24 points right now. S&P is up 4. Composite down 4 points, and the Russell 2000 off a couple out here. Let's take a peek in on some of the currency markets out here. Let's start off by taking a look at the Great British Pound. As you know, we've been following this. Has been traveling in a nice sideways consolidation here ever since the trading session of September the 16th. A pretty good consolidation zone, 1.588-ish, all the way up to the 162.50 range out here. It has rejected the lows. Did it with a nice big old bullish engulfing candle yesterday. So these lows are really, really, really well supported. Take a look at each time down here. Wide-ranging bars out here. Now, this is not a bullish engulfing candle, the session of September 18th, because price was moving up there. But big old wide price spread out here. Where we did see a bullish engulfing candle was on the trading session of October 7th out here, or 17th, I should say, as well as yesterday. These lows are being defended with a vigilance out here. Now, we take a look at an intraday chart. We take a look at for patterns out here. We'll go take a look at the 30-minute chart. The 30-minute chart, this had a nice A to B equals CD down. We used that when we were taking a look at price moving down the other day into the lows here on November the 12th out there. Those were the lows that actually held. You can then see the formation of the bullish engulfing candle that had formed after that time period. Now what we're seeing here is an A to B equals CD up. The 8-point I'm using here, just the more conservative one right now, coming off of 4 a.m. This was 4 a.m. yesterday morning. That was at $1.58.8. You're at your A point. Your B point is up here at 5 o'clock in the evening last night. That was out at $1.60, 1.606 out here. The retracement on this, you can see, relatively shallow retracement. Your B to C is only a 0.382 retracement. And what does that tell us, folks? Well, first, the A to B equals CD. The 1-to-1 says 161.77. But is that where price will stop? Steve-O says no. Steve-O says maybe 162.28, 162.93 out here. So we'll say 162.28 to 162.93. If we go back to the daily out here, 162.59 is the top of it. So 162.59. Let's come back into the daily because I forgot that number. So 162.59. Let's come back to the 30-minute chart. 162.59. That is going to that's going to be your 1 to 1.272, maybe a little bit beyond that. It looks like that is exactly what the Great British Pound wants to do. Now, on the intraday chart, it looks like it's going to go ahead and form a butterfly pattern out here. If we take a look at this swing point here from 2 o'clock in the afternoon, November 7th, down to the low here, you'll see right at that 161.77. Yes, it sure does. That's a 1.272 butterfly. We'll just draw that pattern in here, see what that looks like. So that may be, well, that's going to be the target of where it is headed to. That's going to be a pretty decent resistance point, but it does look to me at this moment that what the Great British Pound wants to do is not the 1.272 butterfly, but more likely the 1.618 butterfly and make its way all the way up to the 162.73 range. That is the pattern that is underway at the moment inside the Great British Pound, U.S. dollar. So what is it that you're focusing on today? Well, inside the New York Stock Exchange, the bulls still were unable to overcome the bears out there. I believe that number. I'll look for you again out here. What you would need to see is net advancing issues of 1,008 or more. As we speak on the New York Stock Exchange, you've got 544. So as soon as you get that, the bulls will have firm control of really all of the indexes out here, if in fact that is what occurs today. Stay tuned. Basil Chapman is up next. After Basil, we got our man Larry Pesavento. We've got Daryl Martin, David White, the whole show, Andy Heck from 3 to 4, and the Tom O'Brien Show from 4 to 6. Have a terrific Thursday, folks. Look forward to seeing you tomorrow morning. Take care.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.